Look, we've got 5 charts today, so a bit of a plethora to go through. Let's kick off with the S&P 500, the biggest of the US caps. You can go and find them. A lot of people are making a bit of the bounce that we saw last week. What, from a technical perspective, are the charts telling you?
So yeah, we'll start by just looking at the broader market. So the S&P 500 is looking a lot better now, definitely after those that bounce from the last few days. So it's in some ways we're sort of expecting some sort of move here in the S&P 500, because what I'm showing here is basically the daily chart at the top and the RSI at the bottom. So basically a measure of momentum, and what we've seen develop over the last several weeks is something known as bullish divergence. So basically very quickly what that means is, as we could see at the bottom of the screen, in January that RSI bottomed out and it has been trending higher since January, whereas the price of the S&P 500 has been trending lower. So it was telling us that the pullback in the S&P 500 was slowing down, and as we could see last week, it broke that downtrend line. I've circled that. So looking a lot more positive than it was even only a week ago. Whether it wants to kick on here and test new highs or drift sideways for a bit, it's impossible to know. But if I had to get off the fence and say, is the market going to head higher or lower over the next few months, based on this chart, I'd say we've got some more upside now.
Right, so not overboard on the RSI either. Where was that downward sloping resistance line that it broke through? Whereabouts roughly at the moment from a points perspective?
I can't remember off the top of my head, but basically it's very easy for someone at home to draw the line, hooking up those highs.
Yep.
Look, in terms of, you mentioned short-term perhaps being overbought. Yes, I think I wouldn't be surprised if in the next few days we just see a slight cooling off in the S&P 500. Actually, that would be quite nice to see that happen. As long as it stays above that diagonal line, I think we've got further upside over the next few months.
Okay, so maybe a bit of consolidation and maybe a retest of those levels that we saw there on the chart. Now, I like the next 4 we've got here. So just explain what these companies are. So you're looking at them purely from a price perspective. You don't care about the name, don't care what they do, just the price action that they're giving at the moment.
That's right. So normally I come on the show and I've got some businesses which I like fundamentally and have a good chart, and that's normally the way we invest. But look, there's plenty of breakouts happening at the moment on the market, and there were a few that grabbed my attention, and I thought, look, for the traders out there who purely want to trade price action, you don't care what they're called, what they do, and to be honest, I don't know what these guys do, but they're great looking charts. And if you want to buy something today and potentially be out in a few days' time with a handy profit, I think these 4 look great.
Alrighty, let's get to the first one. So Essential Metals, the ASX ticker code is ESS. Let's have a look at this one and see the explosive breakout we're seeing on this chart.
So this one, actually, the one thing I do know about it is it's lithium, because most of the lithium stocks have a fairly similar setup happening at the moment. So great looking chart here. What we're looking at is basically a share price that went sideways up until the start of the year, rallied very strongly on volume. So the bars at the bottom of volume, so huge increase in volume. Now, you don't want to chase a stock when it does that. You want to wait for it to settle down and get a lower risk entry point, and that's exactly what's happened here. So ESS has eased back across sort of late January, February, lower volume. That's great. Then it started to base out over the last few weeks, and then yesterday I've circled there, Friday, pushed higher on volume, and it's up slightly today. So if we're looking at, in terms of risk reward, so we want to place our stops, again, purely for the traders, that horizontal line there, which is around 40 cents, is where your stop level is. You'd be expecting a retest up near 60, 65. So, and it may well do that in the next few days at this rate. So it's still, at current levels, still looking like a buying opportunity.
Okay.